This is our Forex blog for Monday, October 10th, 2011. And like most days, we really want to buy the strongest currencies versus the weak. Some days markets are choppy, and other days like this, it's pretty much a no-brainer. You can see the real-time weakness in the dollar and the yen. The intermediate time frame trends down. The daily, weekly trend shifted down as of Sunday. The monthly trend's still up in both of these. But anytime you have readings over 80, our statistical trend tools use 5 different ones and averages them together. 3 of them show the direction of the dollar. Is it going up or down? Clearly today was going down. One of them shows the intermediate time frame intensity of trend. And the last one shows the bar by bar, which in this case we have this set up on a 5-minute chart with the chart hidden, just looking at the indicator panel. It uses a 5-minute statistics with about 30% weight, showing how much intensity on every 5-minute bar this one's going up or down. So when you blend those all together, you get a very smooth reading. You only have to look at one indicator versus 2 to 5, and basically you're looking for extreme weakness that matches the longer term trends. And then when there's a pullback that doesn't have, or a counter trend move that doesn't have very much momentum compared to the previous trend strength, you're looking just for signs to sell it here, again right here, again right here. You can see that trend lasted an hour. Again right here, there's no strength. And pretty much all day we're looking to sell the dollar. The euro was very strong, and it's up on all time frames. Also the Australian's very strong, and it's up on all time frames except the monthly. Between the weekly and the monthly trend, which is on the bottom, the little color strips, I prefer the weekly for intraday trading. So basically today our best bets were to buy the euro dollar, buy the euro yen, buy the Australian dollar, buy the Australian yen. So here's the charts. We'll start with the euro dollar. Back on Sunday, you can see it went from underneath the hourly to above it. That's one of our primary places to focus on buys. We have a 10-day moving average right here. It broke from underneath to above it, and it's going sideways. So when it breaks out right here, you get in with a small profit. Loss, your third trade right here, you're in somewhere around 75. You can see our intelligent trailing stop got you out right here at the high at 67. Now whether you want to continue trading this to the upside, when it gets above the upper white containment band, most of the time the market's reverse. But today was just incredibly strong. If you want to break our normal rules, just make sure you get out whenever the trailing stop has you. You have a small win here. In this trade right here, goes from 87 to 15, another 30 pips, and you're in this trade. I wouldn't have taken the last one. It's way above the upper containment band. It's very likely to stall in reverse, but it's just so strong it continued. So our currency meter really nailed it today with the euro dollar, just straight up. On trend days like this, just trade with the trend. Here, the same thing with the euro yen. Went above the hourly, went sideways, broke out, small 20 pip win. You got long right here, and you had a small 8 or 10 pip loss. You got in right here, 38 to 90. So that's about a 50 pip win. And then another trade right here, which is another 35 pip win. This one was a little bit higher probability than the euro because it wasn't up so much above the upper containment band. Anytime it goes above the upper containment band, pulls back, and then starts to go back up again, you can usually buy the first time. I wouldn't have bought this last one right here, but this trade right here, you would have been in it around 20 and out around 60 for another 40 pips. Let's look at the Australian dollar, which again was pretty much strong on all time frames today. You want to buy the Australian dollar, especially when it goes from underneath above the hourly. This little pullback here, you have a loss. You have a very small win here. You have a break even. This trade right here, you're in at 40, out at 07 here, so you have almost 60. You have about 65 pips there. Small win here, and you can see when it got above the upper containment band, it became kind of choppy, which most of the time is what happens. Here's the Australian yen. If I can find it, here it is. Again, when it went above the hourly, nice trade here. Loss, small win, small loss. This trade in here at 47, out here at 87, 40 pip win. Nice little sideways rectangle breakout here. Went up about 25 pips. Pullback, small profit, pullback, small profit. And you can see this one wasn't overextended and above our white 2.0 containment band. So odds-wise, most of the time you're safer picking a currency that is underneath the lower 2.0 white band to buy pullbacks in. But you can see just straight up pretty much super tiny losses and huge wins. Now, you could also trade any other currency that's strong today against the dollar and the yen, but these are the highest probability because all the time frames lined up. The Swiss was strong today, but the weekly and monthly trend were down. So, of course, you could have taken a dollar Swiss trade today, but most of the time you're not going to make as many pips. So, you know, if you saw this underneath the hourly right here and it broke down, you can see earlier today, probably a small win here, 8 pip loss, short right here around 09, and out at 28. I mean, that's a huge 80 pip profit or so. And then when it gets underneath the lower containment band, you probably don't want to take any more trades, even though it continued down for a considerable amount. The longer term trend was, well, actually, between these two pairs, it actually shifted down at 5. But you're usually best when most of the longer time frame trends line up. Now, you could have also traded the euro against the semi-weak CAD, and the pound went very weak today. The euro pound is definitely going to explode up today. Let's bring this chart up and show you. But when you have so many low risk, high probability trades, you know, with more of the time frames lined up, your usually best bet is to, you know, trade this the euro against the dollar or the yen. Here's our FX Trend Pro, which is one of our, it's the same tool that's on as our currency meter. And you can see this one, you know, at this point right here had a lot of strength. It had a little sideways rectangle pattern breakout right here, you know, for a small win. Notice the moves to the upside have more momentum than the pullbacks. And anytime you have a really strong move up with a very light, very low momentum pullback, usually that's a pretty high probability trade. I prefer pullbacks versus, you know, sideways rectangle pattern breakouts. Those are the two main entry methods we use. You can see, you know, sideways rectangle breakout here and here. I prefer a pullback. You know, at least not for the euro pound, but for most currencies, 15 to 25 pip pullback, where you have plus 80 strength on the way up and at least half or 1/3 of weakness on the way down. That trend usually continues. And when it doesn't, most of the time it goes up 10, 12, 15 pips, and enough to allow you to move your 10 pip stop to break even. So when the trades don't work out, when you see a momentum move like this, you know, usually you're going to break even. Now the pound was weak and the Swiss was strong. Pound Swiss would have been another good one to sell. As you can see, just incredible weakness right here. And this one was so weak that you didn't even get a pullback, which is one of the reasons why we have two entry methods. This one just slightly pulled back and then went sideways. I'd short this right here and hope it goes through the low, and once it does, you usually want to draw your fibs on the first wave down, and that makes a great place to get out with a profit target here. You short somewhere up here at let's say 29 and out at 45, or let's just say 50. 80 pip move. And our currency meter, or FX Trend Pro, clearly showed that, you know, you had a ridiculously weak pound, very strong Swiss, and this is exactly what, you know, you want to sell. Today was an easy day. You know, most days the market goes up for an hour or two, then it down for half an hour, 10 hour, hour and a half. You never know how long. Today was a no-brainer day. The trends just continued. Anybody who traded with the trend should have made money today, because the trends just kept going.